Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, July 29th. Wow. Already end of July here and heading into the final stretch before kids go back to school here. I'm sure they're anxious about that. I know some of us parents probably are excited about that. Anyways, we do got a lot of data to go over today, so we'll jump right into it. We got the start with the GDP, or also known as the gross domestic product, for the Q2. So basically, this is the first report of the second quarter for the GDP. Typically, we'll have the final revision coming in September. So this is the first, and we'll have the second and third. So, but strangely enough, even though we had the final revision for the first quarter got revised even lower again, from 1.1 down to 0.8% for the first quarter. So this is the first quarter at 0.8%. It worsened. Forecast for second quarter was at 2.6%, and we end up a long ways away from that at 1.2%. Yesterday, late in the day, the Federal Reserve out of Atlanta, I believe it was Lacker was his name, came out and they revised theirs lower. I think they were forecasting around 2.2 initially and lowered it down to like 1.8. So this is even a lot further than what his estimates were. So obviously this is a little discouraging for where the economy is moving. Also, employment cost index, the cost of employment basically remained the same. So we went up 0.6% in the previous quarter, and then the forecast was supposed to go up another 0.6%, and it did. It came in at expectation. So this is stuff that could help with the inflation numbers, since inflation's been so low. We're down to about 1.6% with the PCE, core PCE. And the Fed would like to get that closer to 2%. So that's one of the reasons why Fed hasn't been so anxious about raising interest rates, because it's been kind of slugging along so slow that inflation's at a low level here. So they like to try to bring that up, and employment cost index could help bring that up a little bit. So it'll be interesting to see when we see the next inflation number as to if this will bump it up or not. Chicago PMI. A little bit better than what we've been seeing on the East Coast here. This is the manufacturing numbers we see in the Chicago region. So we had a 56.8 back in June, and like a lot of these indexes, anything above 50 is considered expansion, whereas anything below 50 it becomes contraction, and we're at 55.8 for the month of July. So it did dip, unfortunately, but it did stay above the 50, whereas most of the ones we've been seeing lately from Chicago and New York, out of Philadelphia and New York, actually had negative numbers. So at least Chicago's staying above ground here. Also, consumer sentiment. This is the final revision here. So we had one earlier in the month, which came in at 89.5, and they thought it would go up to 90.4, and it basically split the difference here. It came in at 90. So people are feeling decent about where things are at right now. Stock market is currently down. Of course, a lot of it had to do with the data we saw with the disappointing GDP coming in. So those are kind of different things here. We also, of course, as we mentioned, the earnings reports are still in there, and there's been some disappointments like Exxon coming in. Bank of Japan came in, left their rates unchanged, as well as for the most part their policies. That surprised a little bit to investors, primarily because since the Brexit, the yen has gone up in value, and the problem with the yen going up in value is it makes it more difficult for them to sell the products overseas with exports, because the cost of goods becomes more expensive. Whereas before they kept it lower, so they're able to export more goods, and now with the higher yen, it's going to be more difficult to do so. So they thought maybe they might try to manipulate it a little bit, so that way maybe reduce rates or do something else to devalue the yen a bit. But they did, at this meeting, they left that unchanged. Also, we're seeing the oil continue to drop down. It's down to about $40 a barrel. So hopefully we'll see continued improvement in our gas prices, right? So anyways, let's go jump here in the bond market. As we see now, we're starting to see a trend here going upwards, which is helping us out here. We had a kind of a late rally in the day here, which helped boost us even further away from the 25 and 10-day moving average. As you saw, we saw both ways, so that kind of can get a little scary at times, primarily because it kind of tells you it doesn't know which way to go. And then today it started a little bit lower, basically right off the 25-day moving average. But now we're up about 16. It was even a few moments ago 19 basis points higher. So we'll have, which is great news. We're getting kind of closer to those levels we saw earlier in the month here, and we'll see if we can get there again. All right, but right now we're trending that way, and we have a nice improvement in our interest rates today versus yesterday. All right, have a wonderful day. Thanks so much for watching, and I hope you guys have a great great weekend. We'll see you guys next month, which will be August 1st on Monday. Take care. Bye.